Samuel, why is it that you're one of those few people who did not expect the CBR to cut rates?
Well, one is the fact that the shilling has been under pressure. We have high demand for the dollar on our market, and that has been putting pressure on the shilling. I mean, Kenya is a net importer, and we have had, fuel prices had gone up. But I'm thinking that now that we have seen global oil prices going down, that will actually ease the burden in terms of the demand for the dollar. I think there was also a high level of dividend repatriation over the last few weeks, and that definitely might have had some pressure on the shilling. And so my thinking was that the central bank, the committee that deals with the CBR, would have thought that there's still too much pressure on the shilling for them to make any substantial changes. So I was thinking that at the most they would cut maybe 100 basis points or keep it at 18%.
But do you think this will provide the necessary support for the shilling going forward?
Well, I think so. I think apart from the shilling, we have the fact that inflation has continued to go down, and definitely there's no way we are going to have inflation going down, hopefully to single digits in the next maybe 1 or 2 months if the trend continues, and we stay with our CBR rate that is in the double digits and as high as 18%, which means that going forward they will have to at least relent and maybe start bringing it down, albeit in small bits rather than as drastically as they raised it. And I think that if oil prices continue to stay down, then it means that our import bill will also not be as high as it has been, and that will also impact positively on the shilling, and probably going forward we are going to see less pressure on the shilling.
Let's move on to the NIC Securities Exchange, where foreign participation appears to have heightened. Has this got to do with the global economic situation and looking for other places to put their money?
Well, I'm thinking that seeing that billions of euros have actually been exiting the Spanish and the Greek markets, definitely we are going to be expecting that these investors will be looking for somewhere to put their money. And the fact that there's still quite a bit of uncertainty in the MENA region, then we find that the sub-Saharan Africa and especially East Africa gives them a frontier market where they can at least be able to invest for the time being. Of course, going forward, we do expect to have some uncertainty coming from our region, considering that we are going into an election period, and that will bring up the political risk in this region, and therefore we would expect to see a bit of a slowdown probably in foreign investor participation as we approach the elections.
KenolKobil appears to be widening its market share against its next closest rival, Total, both are listed companies. What are you thinking about this counters right now?
Well, I think KenolKobil have both local and geographical diversification in the downstream distribution sector, and that has given them the ability to actually be able to create the sort of volumes that are needed, or the sort of volumes that actually cost a lot of foreign distributors, petroleum distributors, to exit our markets. And that in itself, and market knowledge, considering that KenolKobil is actually a local company and they have very good market knowledge, has given them the edge against all the other distributors. I think now that we have heard that the company is in a takeover, there's a takeover bid for the company by somebody who will also give them an edge in terms of the midstream and upstream sector, will also help KenolKobil to at least now start getting better prices. And if you look at KenolKobil, they actually managed to do this during a time when fuel prices were very high and they were giving discounts, which means that they do have a very good distribution system, and that distribution system is working to their advantage.
The other activity that was picking up quite well yesterday was Athi River Mining and EABL. Very quickly on both, what's happening in those counters?
Well, Athi River Mining are going to have the AGM next month, and I think that investors will be expecting the company to announce a share split. We've seen in past splits that the stocks go up. Before that happened with KenolKobil, it happened with the Barclays Bank, and it also happened with KPLC. So I think that is causing some activity on that stock, and I believe that that is what investors want to take. They're taking up those shares now in anticipation of that split. On the part of EABL, I think that this is just normal activity. We have seen EABL has recently changed their management structures. They've brought in new management, and I think that brings a sort of interest in what the company is doing, and we do expect them to announce their results sometime soon, and that is definitely going to cause increased activity on the company.
We'll leave it there. Many thanks. Samuel Gichohi, Head of Business Development at NIC Securities, joining us in Nairobi.